everyone. So today we're going to be working on problem number 2 from the chapter 7 homework on Connect. So we'll start right in with the problem. So it gives us the accounts receivable balance for Renew Spa at December 31st, year 1, which was $61,000. And it also gives us the balance in the allowance for doubtful accounts of $3,750. That gives us some transactions that have occurred throughout year 2. So first off, we want to make sure that those beginning account balances for accounts receivable and allowance for doubtful accounts are recorded over here in our T accounts. And as you can see, they are already filled in on mine. So that is the first thing that you want to do. And then we'll move into the transactions. I'm going to record the transactions on my general journal as well as on my T account, since both of those steps are required in this problem. Right. So first off, it tells us that during year 2, $2,100 of accounts receivable were written off as uncollectible. So basically what we can figure out from that is that we are writing that off completely off the books. It is not an estimate, so we are not using our uncollectible accounts expense. We are writing it directly off of our accounts receivable. So what that would look like is we will be debiting our allowance for doubtful accounts, $2,100, and then we will be crediting our accounts receivable, $2,100, because we do not think that we will be receiving that money anymore. We will not be receiving cash. Also, I want to make sure to write that on my T accounts as well. So 2,100, 2,100. So the second event, it says that in addition, Renew unexpectedly collected $500 of receivables that had been written off in a previous accounting period. So this is a case where we had done the write-off, we had debited our allowance for doubtful accounts, we had credited our accounts receivable, we said we aren't going to be receiving this money. And then unexpectedly, we actually received $500 in cash. So when that happens, that is a 2-part journal entry. We have to record our accounts receivable going back up and our allowance for doubtful accounts also going back up. And then we actually have to record that receiving of the cash. So what that's going to look like is for journal entry 2A, we are going to debit our accounts receivable for $500, and we are going to credit our allowance for doubtful accounts also for $500. I'm just going to record that over here on my T accounts. So 2A, $500, 2A, $500, just like that. And then for the second part of this journal entry, we are going to recognize that we have received cash. So obviously when we receive cash, we are going to debit cash for $500. And then our accounts receivable is going to go back down by $500. It is important that we do both steps there in order to allow for our allowance for doubtful accounts to increase. We have to recognize that. All right, and then so we have 2B. We are going to debit our cash, credit our accounts receivable. Good. So then, number 3, it says that services provided on account during year 2 were $215,000. Our accounts receivable is going to go up, as well as our service revenue. For $215,000. I'm going to record that over here on my T accounts. We have accounts receivable, $215,000, and we have service revenue, $215,000. Next, it says that cash collections from receivables were $218,000 in year 2. So that means we received cash and our accounts receivable is going to go down. And that was for $218,000. And then I'm going to record that over here on my T accounts. Debit cash, $218,000. And, oops, I accidentally put the $215,000 as a credit, and I meant to do it as a debit from number 3. I'll just fix that. That should be an 8. So accounts receivable and transaction number 3, we are debiting our accounts receivable for $215,000, and then transaction number 4, where we actually collected that cash, our accounts receivable is decreasing by $218,000. All right. And then, last but not least, number 5, it says that our uncollectible accounts expense was estimated to be 2% of the sales on account for the period. So it looks like the only sales that we had on account for the period were this service revenue of $215,000. There was no other service revenue that we recognized this period. So I'm just going to do a simple math equation, 215,000 multiplied by 2% in order to calculate my uncollectible accounts expense. I'm going to do that on my calculator really quick. And I find that the uncollectible accounts expense is $4,300. So we are going to debit uncollectible accounts expense for $4,300. And then we are going to credit allowance for doubtful accounts because that is our estimate at the end of the year for what we don't expect to collect. But we are not writing it off like we did in transaction 1 in this problem. All right, and then I am going to put that in my T accounts over here. We have $4,300 credited, allowance for doubtful accounts, and debit, uncollectible accounts expense. And it's nice, it already totaled each of the T accounts for us as we went. So mine's obviously on paper, but it already gave me my end balances, which is nice. And so now we can move on to part B and C, and it should be pretty easy with the information that we already have from our T accounts and our journal entries. So it says that it wants us to find B1, the balance of allowance for doubtful accounts at December 31st, year 2. So we're just going to look to our T accounts And that balance was already calculated for us. So mine was $6,450. And that's what I'm going to put for my ending balance and allowance for doubtful accounts. Boom. Then it also asks us for the balance of accounts receivable at December 31st, year 2. And that is another T account that we have. So $55,900, that was my ending balance there. Then we have the net realizable value of accounts receivable at December 31st, year 2. And we'll remember that in order to find this amount, you have to take your accounts receivable and subtract your allowance for doubtful accounts. And that is how you calculate your net realizable value. So we're taking this $55,900 and subtracting from it $6,450. Just plug that into your calculator real quick. And we'll find that the net realizable value is $49,450 for year 2. And then moving on, it asks us for part C, what amount of uncollectible accounts expense will revenue report for year 2? And that is another amount that we already found up here, $4,300. If you remember, we calculated that by taking 2% of our revenue. That's how much it said that our estimate for uncollectible accounts expense should be, but we already did that in an earlier step. So I'm just going to write in here $4,300 for my uncollectible accounts expense. All right, that's all for this video.